What is up, guys? D Chantilly, and today we'll be talking about why I purchased shares in DraftKings. And first of all the information is as of May 18th, 2020, so that's just something for you to keep in mind. And as of that day, the stock price was $29.80 a share, giving the company a valuation of $9.23 billion. They went public through a reverse IPO, which is a bit different. They merged with Diamond Eagle Acquisition Corp, and a reverse IPO is when a private company takes control and merges with a dormant public company. And there's examples of this in the past. Nikola Motors, what we just did a video on recently, did it the same way. So let's look at the breakdown. DraftKings reports its financials alongside SB Tech, which is a sports betting technology and solutions provider. They also provide iGaming, which deals with wagering through the internet. Both companies were technically acquired by Diamond Eagle, but the combined companies will be called DraftKings. And the combined companies have an exceptional amount of diversity due to the fact that DraftKings is primarily North American, while SB Tech is primarily in Europe. And you'll see that on the financials because DraftKings reports in dollars and SB reports in euros. And so, speaking of the financials, let's go to the financials. And let's take a look at DraftKings first. They did $88.542 million, up 30% year over year in revenue. Net losses came in at $66.68 million, and adjusted net loss came in at $49.46 million. For SB Tech, they had revenue of 22.594 million euros, up 3% year over year. Net loss of 6.985 million euros, and an adjusted net loss of 851,000 euros, and I converted it to US dollar for us Americans. And now let's take a look at the combined company. They have $113,213,518 in revenue, a net loss of $74,307,270, and an adjusted net loss of $50,389,249. And also returned the favor and converted it to euros for our friends overseas. And the company stated that DraftKings was on pace to have 60% year-over-year growth prior to March 11th, while SB Tech was pacing 19% year-over-year growth prior to March 11th. So overall, very promising stuff. And let's take a look at some more of the business highlights. They have $450 million plus in cash on the balance sheet with no debt. And everyone who knows me knows that I like the sound of that. The company has received $304 million from institutional investors. They said they have the ability to manage a monthly cash burn between $15 and $20 million with no major sports. And they said they're capitalized enough to expand into online betting as more states begin to legalize. And that's one of the good things about this company. It's not just DraftKings. It's not just sports betting. This is online gambling. They have online casinos. And so this company is not strictly online sports betting. And so let's take a deeper look into DraftKings. Monthly unique players, which is defined as the number of unique paid users per month who had a paid engagement across one or more of our product offerings via our platform. And the company says that the MUPs, which is going to be fun to say for a long time because I'm so tempted to say Muppets, but that's, anyway, are the key. They say that the MUPs are a key indicator of the scale of our user base and awareness of our brand. And MUPs came in for quarter one at 720,000 versus 619,000 in 2019. And then they have a metric called average revenue per MUP, or ARPMUP. That's not fun to say. Average revenue per MUP, which is calculated as the average monthly revenue for a reporting period divided by MUPs for the same period. And in average revenue per MUP, I refuse to say ARPMUP, came in for quarter one at $41 versus $37 in 2019, which represents about a 10.8% year-over-year increase. And the company hasn't given us a lot of information, but the information we have is encouraging. DraftKings has 60% of the daily fantasy sports market. DraftKings was rated the #1 platform. The industry as a whole, the global online gaming total adjustable market is $70+ billion. The U.S. total adjustable market is $20 billion plus, with more legalization on the way. Morgan Stanley predicts that the U.S. sports betting market will reach $7 billion in revenue by 2025. That's up from $833 million this year. And Morgan Stanley actually raised their outlook from $5 billion the last time they came out with their projections. And so there we have it. I'm very encouraged by what I saw from DraftKings, and it encouraged me so much to actually go out and buy shares. I don't usually buy shares in companies this early into their public state, but I felt like it's okay to make exceptions sometimes, and this was one of them. And so let me know down in the comment section below what you think. Are you buying DraftKings? Is there something I missed? Is there some concerns you may have about this company? Let me know down in the comment section below. See you next time.